Thanks for clicking. My name is Mark Mitchell. I'm a mortgage broker here in London, Ontario. Stats Canada released its inflation data this morning as everyone was watching to see how much prices had shot up in October. As we've seen inflation rise in August at 4.1% and September at 4.4%, the Bank of Canada has started to warn that interest rates are on the horizon and will be coming down the pipe sooner rather than later. Definitely sooner than we had expected. So what I want to do today is go through the inflation data released by Stats Canada. As every little bit that inflation goes up, so does the time frame for which we're going to see interest rate hikes from the Bank of Canada.
Would you say it's time for everyone to panic? Yes, I would, Kent.
Then I want to go over a few predictions as to when we are going to expect those interest rate hikes as the Bank of Canada, the markets, and the banks are starting to weigh in more and more when we can expect and how much we can expect to see interest rates going up. And then I want to follow up with a brief discussion of the inflation data that we've looked over, interest rates, and the Canadian real estate market, as the real estate market is starting to respond, I think, to the impending interest rate hikes that we are about to see. We will have more updates coming out on this, and of course we have our weekly China update coming out on Friday. And of course, any major real estate hikes will have some updates on that. So if you want to get those updates, click like and subscribe. But for now, let's get into that inflation data. So the inflation data came in at 4.7%, which is obviously much, much higher than the 1 to 3% that the Bank of Canada aims for.
No, don't like that.
It's much lower than the US's 6.2%, which shocked markets last week. But remember, Canada usually lags a little bit behind the US. So 4.7% that's probably not the end of it. Even Bank of Canada Governor Tiff Macklem predicted that we're going to be seeing about 5% inflation by the end of the year. So I guess we'll find out next month. But as far as interest rate hikes go, we have a number of predictions coming out. As everybody kind of knows, the writing's on the wall that the era of cheap money is over. The Bank of Canada, for its part, announced last week that we're probably looking around April to September as a timeline for when we're going to see those interest rate hikes.
And if you want it in months, sometime between April and September.
Manulife has been a little bit more precise in its predictions, thinking that we're going to see hikes between May and July of next year. RBC is predicting that we're going to see 3 rate hikes next year. Then the CIBC Bank is taking more of an I told you so approach, saying that we're probably going to see rate hikes of 1.25% to 1.75% over the next coming while, although they didn't give an exact prediction for how long that would take. But they did warn that the interest rate hikes are going to be felt mostly by pandemic buyers who got in at low rates and are now going to start to feel the stresses of those high prices and high rates at the same time.
I told you so!
And then, as we've gone through on this channel a few times before, Scotiabank is by far the biggest naysayer, worrying that we're going to have 8 rate hikes over the next 2 years, although they didn't specify when those rate hikes would come. And then finally, the money markets are expecting that we're going to see rate hikes as early as March of next year. So that's coming by quickly. That's really only 3 months away that we could possibly see these interest rate hikes coming. And it's definitely good to prepare, and I think we're starting to see that already in the market. It's not really news to anyone that Canadian real estate was exploded this year and the previous year as well, and it was reported just this week that the average price in Canada is up 18% year over year, with October seeing an increase in sales up 9%. I do think that this recent surge in home prices, in sales, has a lot to do with the inflation data coming out. I think people are well aware that the party's over. The era of cheap money is definitely coming to an end, at least this cycle of it. So I think there's a lot of people rushing in to get their hands on property and lock in their mortgage before the interest rate hikes come into effect.
Sir, here is a check with my name on it. Write down any number on this piece of paper and I will pay it.
If you're looking at, say, 2% hikes over the next 2 years, just in my area, which is London, Ontario, the average price of a house could run you an extra $600 per month once those rate hikes set in. And this was a worry when the stress test came in. People were worried that right before the stress test, buyers would run into the market and try to buy before new affordability requirements came out. And in some markets, indeed, they did. So this is very much the same pattern, where I think a lot of people are going to be rushing in to buy right now while they can, before we see those hikes go up in the 2022 spring and summer market. So I think in the next few months, we are going to see, even in the winter months, prices continue to go up by at least a little bit. I don't think they're going to go up another 20% by this time next year, but I would expect for us to still continue to see that little bit of a bump over the next few months. And then I think it's probably going to slow down quite a bit and almost flatline as we start to see those rates go up. What happens after that is we're going to wait and see what happens with the interest rate hikes. How well does the economy do? Does the Bank of Canada continue to hike rates after they've done it a quarter point, a half a point, 3/4 of a point? There's a reason they do it 0.25 percentage points at a time, because they want to see what are the effects of this data. So how much interest rates go up, I think they're going to see how much the economy can handle. And we're really just coming to an end of the lockdowns, hopefully. So we really don't know what our economy is going to look like a year from now. We have no idea. The money markets, the banks, the Bank of Canada can predict what it's going to look like, but we really don't know. And it largely also depends on the US, and it largely depends on China, who is definitely having its own problems right now. And we've gone through a few videos on that as well. So nothing is set in stone. We don't know how much these rates are going to go up, but I think at least for the immediate future, we are going to be seeing some rate hikes early on in 2022, and we'll probably see a bump up in real estate prices as we wait for those rate hikes. As always, we will have updates out on those interest rate hikes should they come down to the pipe, or if there's any major Canadian real estate news. Make sure you click like and subscribe to get those updates, and thanks so much for watching.